What's going on, everybody? Jeff here. Welcome back to the channel. Finally back from a little vacation, getting back to the desk a couple days ago. This is my first video. What a wild week we had. Some astonishing numbers, a massive move to the upside. SPY and SPX, we're seeing record put volume and a lot of traders betting to the opposite side. And that's exactly what it is when you are banking on an earnings or an event. We talk about this numerous times. It is a 100% gamble, getting shredded to the upside. Now we've got tables turning a little bit. People are saying, listen, has inflation peaked? Have we reached the bottom? Is the market going to continue to rally? I want to give you my entire analysis, break some things down. We're going to take a deeper dive, not only into just the market breadth and the previous bear market rallies, where some of the technicals lies, but also talk about this CPI report that was released, give a macro perspective of it, break everything down for you guys. So let's get right into it. First off, as you can see from the past week and a half, the massive move that CPI gave. I mean, it was one of the huge gains, 375 all the way up to about that 395. Now, considering most of it was pre-market, it didn't get logged as one of the biggest intraday gains like the previous CPI because we opened up so much lower last month. But all in all, it was such a short period gain. The SPY gained a total of, I believe this was the biggest or the second biggest green week that we've had all the way throughout the entire year, or might have been the biggest throughout the entire year. As you can see from this massive green candle, we're still channeling to the downside. Okay, we continue to get a little bit of a bear market rally, kind of come back down, and we're slowly stair-stepping to the downside, and we'll cover that a little bit deeper in just a moment. But I want to get into talking a little bit about CPI. It's very important to understand some of these numbers, why they came in, as they did, and then also how the Fed is going to interpret this going forward. Now, we just had another 75 basis point rate hike happen, let's see, 10 days ago from when I'm making this video, and Jerome Powell came out and he said he was very hawkish. He maintained his stance, and he really kind of shut down all of the rumors that were happening, regarding a Fed pivot, just saying, listen, we have a job to do. We understand, that unemployment might have bumped just a tiny little bit. Things are changing a little bit. We still have a job to do. And that is 100% focused on getting down, inflation. So it came in at a 7.7. Now expectations were 7.9, which a lot of investors and analysts really saw that 7.9 a little bit on the low end. Okay. And that's why you saw a heavy, put flow coming in. Now, if that number had come in at the expectations were 8.5 per se, investors would have been a little bit weary, of betting to the downside. Okay, betting that there was going to be a miss. Okay, and the reason being is because when you look at previous CPIs, how much has changed. All right, especially when it comes to shelter and energy, that they didn't really expect that big of a miss and or that big of a gain, and they would probably not position themselves to be to the downside. However, 7.9 they felt was low. That's where you saw a lot of that put flow come in. So it's just important to kind of keep that in mind. If you did bet against this, please, like I said, it is 100% of a gamble. Just know that. And if you didn't and you're trying to get a little bit more information, that is the reason why. So it comes in at 7.7. Okay, core came in at 6.3. Now, a couple things leading to this. One was utility, natural gas, which has come down a little bit, as well as used cars and trucks. Medical services down a little bit as well. Let me scroll down a little bit for you, minus 0.6%. Now, I did see this on Twitter, and I'm going to share this with you guys. 6.3% is your core CPI. So that is all the items when you take out food and energy. Where are the commodities listed at, as well as shelter. Now, it's important to know that month over month, okay, your rents have still increased at a 0.8%, going all the way back the past, 6-7 months. It's been the highest month over month increase. Now, shelter, rents, okay, housing is a very lagging effect. Okay, for example, you're seeing these interest rates, that are more than double from the lows where they were just 6, 7, 8 months ago. However, the housing prices have really just come down. It depends on your area. Some are still just as high. Some are only down 10%, some maybe 15%. Some are still kind of pretty average. That's what I'm seeing in my market. Okay, sellers are not getting that 5% over asking like they were in my area. but it lags. It hasn't really come down, just yet. And that's why you're seeing, and this is the heaviest weighted sector, by the way. Okay. But I saw this on Twitter. 6.3% is your core CPI. If you take out shelter, okay, and you're just talking about all of your other commodities, obviously not food, energy, because that's already excluded in CPI. It was the first month-over-month decline, and it was just a minus 0.1%, but it was the first month-over-month decline that they have seen in about 16 months. Okay, so that's where people are getting, saying, listen, inflation's starting to peak a little bit. We're going to get that, that rise moving forward. Jerome Powell is probably going to slow down rate hikes. They've already said that the 75 basis point consistent hike, it is going to end. It cannot last forever. We went, from all the way where we are, north of, at 4%, north of 4%, our targets, somewhere between that 4.75 to 5.25%. We went from zero in a very, quick time frame. It is going to slow down a little bit, but does that mean that inflation is going to peak? Does that mean that rates are going to stop rising? Does that mean that, excluding just rates, okay, and inflation, what else is going on in the entire economy? Have the macros changed? Okay, how is the labor market going to be affected? Everywhere you look, you see these massive companies, social media companies, big tech companies, laying off people not only by the thousands, but by the tens of thousands. Okay, how is that going to trickle down? How is that going to affect? All right, you take a look at the crypto market. I don't even have to show you the charts. Yes, it has rebounded very, very heavily, but it was massively affected. When are those liquidations, those margin calls going to come into effect? If not, they already have. All right, and just naturally, how does the bigger picture, the structure of our stable financial markets, how do they get affected? That part still hasn't changed. Okay, now I've been on record saying all the way from probably since about February, you can ask everybody inside the group, I'm pretty sure it was February, okay, that I put out that comment where SPY 350 had a magnet. We hit that 350. People came out asking me again, do I think that's a low? Well, there's a couple things that we're going to talk about. All right, and inevitably it's still a bear market rally, unfortunately, until it's not. Okay, so I have two arrows on this screen here. Okay, now it's very important to know that when it comes to the Federal Reserve, they were completely really late on their reaction to inflation. Okay, they were wrong a lot about their perception and their expectations. However, you've seen Jerome Powell slowly start to just be a little bit more aggressive as he's really begun to take serious the severity of this. Okay, so I have these two arrows right here. The market was pushing up, very high after, a massive CPI drop off that we saw all the way back. Okay, in June, market pushed all the way back up to that 430, 432, pulled back a little bit. This arrow was the Jackson Hole Symposium, where Jerome Powell really came out, and this was probably the hawkish I've ever seen him speak. Just saying, listen, we have a job to do. We're going to continue raising rates. The households are going to feel pain. Exact words. Households are going to feel pain. Market pullback. Saw a little bit of a bounce heading into CPI. Boom, all the way down. And here we began to just continue, fall. Saw a little bit of a bounce. Next CPI. Got that 350, which was a massive psychological and a technical level of support. Okay, on the SPY. Saw buyers really step in. Shorts cover their positions. Continue to move higher. The other arrow was kind of the same thing, was when he, raised rates just, 10 days ago as I'm speaking of this, and he comes out and says the same thing. And here we are continuing to move to the upside. So inevitably there is kind of a balancing act that needs to happen. Now, personally, I still do believe that we see, a sub 350. We haven't really seen that massive capitulation, that massive sell-off. Okay. That fear, that insane fear inside the markets where, people are going to start really beginning to panic and lose faith inside the financial markets. Many times these bear markets, you tend to see that when you go back and you compare to previous, time frames where obviously this is different. We have quantitative tightening that is really still at the beginning. We have massive inflation. We had all this M2, money supply that is just massively been printed, that is starting to rebalance as of right now. And if you look at that chart, which is a whole nother video, the M2 money supply, there is so much more room to the downside. It's just very important to know these. So overall, long and short, I haven't really started to build any long positions when it comes to, equities and commons. I'm still playing the intraday. We're still getting a lot of this volatility, playing all of the same, tickers, starting to, continuing to, really analyze these charts and continue to play this until we, until we can. So for now, it's still going to be an intraday move. I'll continue to update you guys. That's it for this video. See you in the next one.